And welcome back to the Morgan Streetman Show. Joining us today, we've got a couple of very special guests with us, E.B. Tucker and Brett Heath of Metalla Royalty and Streaming Company, which is based out of Canada, which is involved in precious metals, I believe primarily in gold mining, royalty streaming, which involves financing of these very expensive gold mines. It's cost, just hundreds of millions of dollars to have a gold mine because of all the equipment that's needed. So they get involved and basically put up some of the money to help these mines operate and go out and get the gold. And in exchange, they get what's called a stream. They get a guaranteed stream of the output of that mine for a certain period of time. And as Brett was explaining to us on the other side of the break, that's actually protected on the title of the mine itself. So, because one of the things you might be thinking of as we're talking about, the different risks that you have in trying to expose your portfolio a little bit to precious metals, one of the things you might worry about, well, what happens if the mine goes bankrupt or somebody else buys it and takes it from me? But what Brett was explaining to us is that's actually not possible with this particular type of finance because Metalla goes on the title of the mine itself. Did I understand that correctly, Brett?
Yeah, that's correct. So in the most of the jurisdictions in the world, the royalty is registered on title and it runs with the land. So if another company comes in and does a hostile takeover, or if a company goes bankrupt and some other company comes in and buys the assets and puts the mine back in production, the royalty's safe. It's safe there and into perpetuity. That means forever. Anything that comes out of that ground, we get our percentage. It's amazing. So, some of these royalties that we've picked up have been in existence for 20, 30, 40 years. It's a lottery ticket that does not expire.
Yeah.
And we've got a lot of them. And I think it's going to do really well for the shareholders going forward.
And I could say, because I am actually one of your shareholders, and it's funny, you guys approached me when you started this and you got into this a couple of years ago, like you were saying, EB, and you said, hey, this is what we're looking at doing. And, the three of us have all been playing in the precious metals markets for years. And frankly, we've been somewhat burned because we had a big uptrend for a number of years. And a lot of us got involved at that time. We got excited about it. And then the uptrend kind of fell off, and it's been trading in a little bit of a down range from where it had, it seemed to have gone up to almost 2,000 at one point, but now it's kind of trading down below that. So, a lot of us were kind of becoming a little bit reticent to at least continue to stay so involved in the gold market. That was a big part of some of our holdings, at least some of my holdings for many years. And, so you guys approached me with this project, and I was kind of like, I don't know, and here it was. I think it was, at 20 cents when you contacted me or something?
Yep.
And, and then finally you tell me, okay, it's getting around 50 cents, Morgan. I mean, we think this thing's really doing well, and you might want to take a look at it. And I'm kind of like, I don't know if I can do it again. I'm just not sure. And then finally the thing, I don't know, what it hit about, 70 or 80 cents.
Was this before or after your Bitcoin?
Oh, this is after that whole Bitcoin thing. Yeah, what I like to refer to as the Bitcoin debacle. But where I didn't buy when I came on the air and said everybody should buy. But now in this case, maybe I learned my lesson and I finally put some money in it, and I put actually a significant piece of money into this company. And just since I put my money in, which was, I felt like I was coming to the game a little bit late, it's gone up by 50% since I went in on it.
Yep. And that doesn't include the dividends. We started paying a dividend, and that was part of what got you, because you were kind of telling me this story, and I said, well, we'll pay you every month. All you got to do is just open the mailbox.
Right. I mean, I love dividend stocks because you're getting something back. You know the company's working. Obviously you don't get the full value of the share every month, but you get something back, and that's in addition to the rise in share price that you're getting. It seems to be that you guys are announcing a lot of deals and things in the company. So it seems like there's a lot of shareholder excitement about what the future holds. And in particular, I understand you guys are running around right now basically trying to close as many deals as you can. Mm-hmm. Can you explain to me why that's going on?
Yeah, because, see, a lot of what you were describing with your personal frustration is what a lot of people struggle with. They finally convince themselves it's a good idea to make an investment once they've read about it in USA Today, and they finally everyone agrees with them in their cul-de-sac party that it's a good idea, and okay, finally it's a good idea. Well, that's usually the time you want to be selling. It's really hard for people to figure this out. So professional investors, and I mean, I've done this for a couple of decades now in different markets, as you've seen, you got to be excited about stuff when nobody wants it. And that's because nobody's looking at it. So when nobody's looking, I mean, remember I was buying a rental property in 2009. That was when we met 10 years ago. That was what you were helping me structure. And I was trying to tell you, you said, God, all these things are boarded up. This is pretty dangerous up there. I said, I know. There's nobody buying rental property. It's buying this stuff for 10 cents on the dollar. Well, now it's a very crowded market. So everyone is buying that. And you have all these New York guys that are competing with you, and there's 20 offers on every property. So you don't want to be in a market like that because it's too much work. So with the gold industry right now, I mean, we think we're setting up for a tremendous and generational rise in the price of gold. And later we can talk about why that would be the case. But I can tell you firsthand that the gold market is in desperate times. And so for Brett, that's a time when people are willing to deal, because they're tired and they're frustrated. And the gold price has gone nowhere for 6 years or more. And so they're just saying, look, just give me something for this, and it's the best I can do. And anyway, so that's the time you want to be excited. Now, what's going to be hard for shareholders is about the time everyone starts talking about it and saying, God, this is great. What do you own a gold company? All this. That's when we'll be probably selling, or we're not doing very much and trying to tell people it's not exciting to us anymore. And so we always tend to run opposite of most people.
Well, and the concept you're kind of laying out there is the sort of follow the herd mentality is not usually going to be that successful in investing. You kind of need to be out in front of the herd. You need to be spotting that thing that right now everybody thinks is junk, but give it 6 months and they're going to have a different perspective on it, or they're going to change their minds. You don't want to be, when everybody's figured out that something is a great area to be in and is already jumping in, you don't want to be following the herd at that point and jumping into it, because your chances are, that the money's already been made in that industry.
Yep.
So if you're not out in front, you're not taking risks. Well, let's talk about the gold price, because that's been something that, is honestly just kind of shocked me over the years, how low the gold price is. When we see all of the other assets, and gold is a tangible asset, we see all the other assets in our society inflating wildly because of what I perceive to be the Fed's quantitative easing program, which is, easy money, as we call it on this show, the Fed's easy money program. It's causing everything to rise in price. Why not gold?
Well, let's put things into context. This can be a big topic for people. How much gold is there in the whole world? Well, let's say maybe 125,000 tons, maybe 130. It's it grows a tiny bit every year. Not that much, though. Okay, let's say that's maybe $7.5 trillion or something like that. Microsoft's market cap is almost $1 trillion, right? Saudi Arabia's state-owned oil company is potentially going to come public in the next year or two. Valuation could be $2 trillion.
Yeah.
Okay, so I mean, you start putting this into context, and you say $7 trillion is not much.
Right.
I mean, the United States does GDP $20 trillion plus per year. I mean, there's probably $70 trillion in debt on country debt in the world if you add everything up. So I mean, it's the gold price has a lot of room to move. I mean, that's I think important for people to understand. Now gold is a finite quantity. I mean, you can't just create as much as you want. Like you can't just make twice as many bottles of Coca-Cola in a day. You can do that, but you can't just turn on a machine and say, I'll take twice as much gold. Right. In fact, the number of gold discoveries in the world has been plummeting. I mean, so you haven't had any large discoveries, and Brett would be an expert on this, maybe 15 years since has been the biggest discovery. So, I mean, you have a supply shortage on the horizon. Yeah.
Well, and that's one of the things is when you've got the industry the way it is right now. I mean, you were explaining to me, basically gold mining companies are collapsing into each other. They're having these mergers, but they're mergers of necessity because neither entity can actually stand on its own in business and continue to make it. So they kind of fall together. and say, well, maybe if we lean on each other, we can make it a little bit further. But companies in that situation are certainly not going to be investing in and funding the search for new deposits.
Well, okay, think about this. When the sector is booming, so take the tech boom that everyone got kind of slaughtered in 1999, 2000, AOL, Time Warner, you have these mergers, these mega mergers, and the CEOs are fighting over who gets to name the stadium. So that's the sign of a market that's about to pop. The other side of it is what's happening in the gold business, where you have these defeated CEOs that just say, "Is there just any role I can have of any kind in the new entity?" Okay, so that's what's happening right now, and it's important to realize that we see that as an exciting thing.
Yeah.
Okay, because people are quitting.
Mm-hmm. So the market doesn't look so great right now.
That's right.
Now might be the time you want to get involved in it. That's your thought process.
Exactly.
Wow. Well, let's talk some more about the Fed when we come back, because there's been so much money printing in the last decade or so, and that's had a huge effect on our economy, including, screwing up the business cycle. We want to kind of try to help the folks at home understand what that's done to us. So stick around, folks. We'll be right back on the Morgan Streetman Show on Money Talk 1010.
Thank you for listening to the Morgan Streetman Show. We hope you enjoyed what you heard, and if you did, please click like and subscribe to help us out. And remember that we recommend that you exercise your brain at least once a week.